What are your expectations for CPI? How do you think it impacts the market?
Well, I think it's what the market has been waiting for. Are we seeing a continued abatement of inflation? Is it leveling out? Or God forbid, is it starting to resurge? Because that's the last thing we need, is inflation to come back, because it'll affect the Fed's narrative in a very negative way. We're already hearing about maybe only one rate cut, maybe zero rate cuts. And I think that the market would really like to see some rate cuts. I think the Fed would like to give us some rate cuts. But as they've been telling us for years, they're going to remain data dependent, Frank. So if we see a number today for core somewhere around 3.7, 3.8, I think the market will like it. If it's too hot, I would expect continued volatility.
All right, you would expect continued volatility if it's just a bit too hot. I mean, last report, it was like 0.1% too hot. So you're saying anything like that, we might see some volatility. I also want to see how you're seeing today shaping up. What's your WEX word of the day?
The WEX word of the day is inflation. We want to keep it simple. Everything's going to boil down to how this CPI number comes out. I know we get PPI tomorrow, which we never used to really talk about, but it's a precursor for PCE. We're looking for data points. We're looking for a narrative that's telling us inflation is coming down. And it has. I mean, the Fed raised rates a lot. There's a lag effect. So far, so good, but it's been sticky for a long time. And maybe that last mile is going to be a challenge. But what the Fed doesn't want to do, and we should agree with this, is we don't want them cutting rates too quickly just to fuel inflation. So it's a fine line. Is June still in play? Probably. Is it likely? I doubt it. We'll know a lot more today. But one data point, as we say every month, it doesn't make the market. But we need to see that trend continue in an abatement of inflation for sure, Frank.
Okay, so if we see the volatility to the downside, the markets take a dip. I know you're looking to buy, but I can't get the words out. You're specifically looking to buy in stocks that are tied to the rally in commodities.
Yeah, if our thesis is true that we're not going to head into a recession, that the consumer's strong, the economy's strong, and we're seeing volatility sort of as a temper tantrum because we're not getting what we want out of the Fed, we think that commodities make a whole lot of sense. Now, I own these names. We are investors in these. We're talking about adding to them on dips. But Freeport, Marathon, these are companies with relatively low multiples, tons and tons of free cash flow. So as you head into driving season, if you believe in the commodity trade, these are names that we feel could be very, very attractive. Freeport, also in the same vein, from a commodity play, it's a little bit pricey here. It has to come down. It's been rallying on this enthusiasm of copper, and that's a really long-term trend. But if you see pullbacks, if you see weakness, if you're looking for a space outside of mega tech, we think commodities make a whole heck of a lot of sense. And we will be adding to these three names on any pullback that we see in the immediate future.